Welcome to Gaming Fin, your channel for everything related to the gaming industry and the financial markets. And my friends, today here is the promised Embracer video. So, oh god, I really took a lot of time to make this video now about the latest earnings release. But I have to excuse myself. It was because I had a cold and therefore my voice was a little bit affected. All right, guys. So here is now the Embracer chart, and if we are looking, this is the overall max chart, as you can see. And here I'm going back, so you can see today not a lot changed. So it's quite a normal day in Embracer land. So minus plus 0.1%, so, and we stand at 17.730. So I also have to admit, guys, that I bought some more shares, so like 200 more shares at 1687. This was and I bought them in euros, so in Frankfurt, not in Swedish krona. So this was around about 150. So this is not a recommendation or anything, not financial advice, my friend. So doesn't mean it's a good point in time to buy now. So I had a limit order in the market since this is following a little bit this is following my strategy that I always buy at some specific resistance lines to the downside. So I very rarely buy stocks in the upwards trends. Now you can say, oh, that's a bad strategy, but I actually found out this strategy works the best for me, and especially if I'm convinced that a stock is not necessarily go bankrupt. But is this still the case of Embracer? Am I convinced that Embracer has actually a chance to survive? Well, they have this massive restructuring program running, so we go into this a little bit later in this video. So this is also going to be a much longer video, so I hope you're going to enjoy it all. So we're going to discuss this, and we're going to check out all the numbers, and we're going to also watch I would say the first part of this of the Embracer earnings conference by the CEO Lars Wingeforst, and then I'm going to comment this. So I think this is going to be very useful. So I'm happy if you join me here. So from a mere technical point of view, of course, I had a market. I had a market order. I had a limit order at 150 euros. So this is done around about the 1687 at this point, because I simply expect that this very strong support might hold, but it can also break, and this is very important. I always say this, so because people ask me now, so Mr. Orange, what is going on? Are they coming back? So guys, this chart looks terrible, and the company has problems, and they were canceling projects, they were closing studios, so there's a lot of negativity in this company. So are they going to disappear? No, I don't think they disappear. So, but I can imagine that they even have to sell some of the studios, that they have to close more studios, that they have to shut down more games that they're developing. All of this, I really don't exclude anything here. So I'm praised for the worth, to be honest, and therefore I always say, put a small amount of your overall portfolio in the stock and don't go all in with all the eggs that you have. So okay, let's look at the 5-day chart. This might be useful, or the 1-month chart. So that's the 1-month chart, and there we see actually what happened. So we were coming down from a 29, falling. Just falling down, so nothing special. So this was to be expected actually, after we went immediately up to 30. So I didn't expect that we would necessarily break through, and then we were falling again from 21, we were falling to 16. So this was a massive drop. I think it was over 20%, and this is when my order has been executed. Then we're coming back a little bit the same day, falling down again, and then we're just trading sideways news, and here it seems so in this line. So this is a little bit also how hedge fund managers or big institutions, they sometimes it's much more easy, they say, than a lot of people that think that, oh, I have to hedge here, I have to buy with average lines and multiple averages or whatever you want to call it. Sometimes sometimes this momentum trading is what a lot of traders are doing. So all right, so let's check some of the news, because there were also some not so good news, and I think I want to first check or first show you this news by JP Morgan. Cuts Embracer, seeing cuts Embracer, that's the price of the shares. Risk for mid-sized games developers. Oh, surprise, JP Morgan. So Mr. Orange, so that's me, guys, I'm saying this already since quite some time. Sir. JP Morgan downgrades Embracer to underway, so that means basically sell. From neutral, and neutral actually also means like hold or sell already. Seeing structural headwinds facing the Swedish game developers' two largest divisions, PC console and tabletop. Trends in PC console and are particularly unfavorable for mid-size EMEA, so that's the European gaming companies. Developers, which are forced to compete with US peers with large budget and monetization advantages and largely set consumer expectations, it says. I like actually this comparison with the European companies to the US companies, in saying actually that the US peers, that they have more budget for games. Trends in tabletop, I'm honestly saying it's about the quality. So an Embracer is not necessarily the company that has high quality or had always high quality games in the past. So trends in the tabletop segment suggest that margins will continue to be under pressure as long as distribution continues to outgrow own IP, the broker, which adds. So moreover, JP Morgan cites risks around the restructuring program and still relatively low visibility. All of the above offset the clear potential value in Embracer and the high quality of many of its assets. So they say this offsets. So this is actually taking the potential value from Embracer that they have with some of their high quality assets. Like, I'm expecting a new Tomb Raider. I want to see a new Tomb Raider. So despite a 15% share price decline following the weak Q3 results, so this was what I just talked about, 15%, 20%, 50% down, the current valuation does not reflect the growing challenges for mid-sized players like Embracer, the broker says. This you can take this statement and put it on all of the other European mid-sized companies like Digital Pros, like a Nakon, like a Focus Entertainment, etc. So it trims target price by 33% to 16. Wow, that's low, guys. That's really low. Both from the disposals in Q4. So yeah, Q4, Q1 25, which are now required during a period of excess supply in the industry and to return medium-term estimates. Out of 18 analysts that covered Embracer stock, 11 rated strong buy or buy, 5 rate hold, and 2 rate sell. Yeah, shall we say? So it doesn't sound good. It's definitely not what you wanna read when you have a company, a stock of a company. So also Embracer signals further layoffs. So 1,387 more job cuts, only the beginning. And it's so funny. It's so funny with job cuts. Not the job cuts are funny, so don't misunderstand me. There are real people that are losing their jobs, and I'm very sad for them. But there's, for example, if you see on X, you see people saying, yeah, the job cuts are coming, some journalists, and then they get a little bit headwind of people saying, yeah, you cannot say that's good for a company, and then immediately say, oh yeah, I'm so sad for them. So the thing is, job cuts, if you look now from a gamer's perspective, from a developer's perspective, so it's not cool. It's really not cool, guys. So don't misunderstand me. But from an investor perspective, from a economical perspective, we need restructuring. We need constant restructuring. Other way you have like administration, you have a government, a state companies where you keep the same people for 50, 60 years, even even if they, even if it's not working anymore. But those are companies. They have one simple goal. So Embracer has one goal. Embracer needs to make money. And if I'm as a shareholder, if I buy stocks, shares by Embracer, I'm not buying the shares because I think they should make the world a better place. I simply buy shares of Embracer because I want Embracer to make money and to make me more money. So it's very simple, guys. And you can hate me on this. So I guess most of the people that watch my channel actually should have understood this, that I'm a classical liberalist, a classical capitalist. So therefore that's just my position. So I'm fine. I'm fine if you have a problem with this, but then it's probably the wrong channel here. Then you should go on a gaming channel, a socialist channel, etc. So let's continue. So layoffs. So what happened? Swedish video game and media holding company reduced 8% of the global workforce since June. So that's a lot. This reduction accounts for 904 job cuts in the second quarter and an additional 483 in the third quarter. The company also scrapped 29 unannounced games during this period. So little bit the history. In a group-wide effort, our companies and studios have had to make difficult decisions, particularly on having two ways with team members. He added, so Lars Wingeforst added, the reduction are managed locally on the operative group level with focus on informing affected employees first and then carried out with compassion, respect, integrity towards those affected. So that's the minimum. You have to do this. Embracer is also in the process of selling parts of its business, possibly including Gearbox, which it acquired in 21, and that's such a big fail. If they really sell Gearbox, it just shows me that they completely speculated when they were acquiring all those studios and other gaming companies, developers. So this is really a fail, and this makes me angry with the stock. So now you ask you, why did you buy even more? So I mean, how much negativity can this stock even get? So still can go down further. So not excluding this, my friends. Will it disappear completely? Oh, that's so difficult to say. Wingeforst said the process are in a mature stages and cautioned that layoffs at Embracer Studios may occur before any sale is completed. So certain companies might initiate restructuring before any divestment is announced. So Wingeforst controversially prioritized shareholder value, stating our overruling principle is to always maximize shareholder value in any given situation. If you write this on X, this is from a public messaging point of view, from public communications point of view. This is killing you. This is killing you, guys. Because all the woke media, all the leftist media, all the gamers, most gamers are leftists, obviously, because they're young and then they believe in a lot of leftist media. They are going to say, yeah, that's so terrible, they're so mean, they just think about the shareholder. So very often also a lot of people don't really know what shareholder means. What is a shareholder? So shareholder are people like me and you. You can just buy now for 150 one share, and then for €1.50 one share, and then you're a shareholder. So and you wanna make 50 cents on those 150, so you want the shares to go up. So that's all, guys. Financially, Embracer may not meet its target of reducing net debt by the end of the fiscal year, but anticipate significant reductions post March 24 through divestment. So that's very important now for the income statement. Embracer's financial challenges stem from the collapse of the $2 billion deal. So you remember the story here. So, wow. All right, guys. So I think we're leaving some of those little news articles, and we go very quickly to the press release. So Embracer Group publishes interim report, the third quarter, October-December. Net sales increased by 4%. So 4%, third quarter, October to December 23. Net sales increased by 4%. So, but organic growth is down. So what we want is organic growth going up. So sales is split. Also, the sales in PC console is down by -5%. Mobile games increased by 4%. Tabletop by 7%. So that's how they calculate this. Entertainment and services increased by 12%. So they were lucky here. with some of their Lord of the Rings franchise. EBIT amounted to 273 million Swedish krona and a margin of 2%. Adjusted EBIT increased by 7%. So not special. I mean, you want me to comment this. Items affected comparability amounted to minus 641 million and are related to previously announced restructuring. The cash effect of the items affecting comparability costs amount to 261 million. Cash flow from operating activities. Basic earnings per share is minus 1.44. Not good, guys, not good. I don't like this. So first 9 months, April, December, net sales increased by 18%. So they like of course they like to show us this number. So 18% for the first 9 months. But I want to see also the quarter, and I want to see the expectations for the whole year. And then what is now written here is then also part of this video that we're going to watch. So also here again, I think that's the same. Yeah, that's the same. So we definitely have to look. The April to December numbers are better than the October to December numbers. So our diversity delivers an all-time high quarter. Diversity of games, of course. So here is our good friend Lars. Lars, make us some money. We have your shares. You have to improve shareholder. So yeah, this is a huge report. So, and I honestly recommend you guys. So if you want to invest in Embracer, if you're not invested yet, if you invested, then you should go through this report at least one time. If you plan to invest, read this report at least one time. There's a lot of things that you might not directly understand when you have not an economic or financial finance background. Then you can you just have to look up some stuff. But of course, it's useful to go through this. So announced PC console releases as of February 15th, for example. That's interesting. So I'm going to zoom in that we all see this better. So games that are coming, then for PC, you see still some games they are making. So Tomb Raider, own internal. So this is the one that I'm looking as a gamer forward to. Knights of the Old Republic remake, is it going to be a good game? Expeditions Mud Runner game can be successful. John Carpenter's Toxic Commando, this is definitely cool. I'm looking forward to this title. So Deep Rock Galactic Rogue Core, I think came out. I thought it came out already. So and then yeah, Space Marine 2, they're also with Saber Interactive, they're part of this. So they have a lot of cooperations with other gaming companies. Kingdom Come Deliverance coming to Switch. That's good, very good. Switch is an extremely successful console. Please bring to all my gaming companies, please bring your games also always to Switch. This is where you can make a little bit more cash. And in those dark times that we are, this is very much important. So here we go. Certain Secret Wars Remastered. So why are you doing this game? Honestly, some of the games are really not the games they should make. So Killing Floor 3, that's important. So I hope this is going to be a success. So alrighty guys, so let's jump here and then we're watching this. And then if you were holding up with me so long, this is amazing. So love you guys, and please also check out my other videos. But now I give over to Lars.
To the business highlights for Q.
Here we go.
Thank you, Eric, and hello and welcome everyone to this Embracer Group's Q3 presentation from Stockholm. Let's dive straight into the business highlights for Q3. First of all, I'm happy to say we delivered another stable quarter with net sales of 12.1 billion and adjusted EBIT of 2.2 billion in Q3. The financial performance was driven by a strong quarter from Asmodee, Middle-earth Enterprises, and our mobile businesses. Organic growth amounted to -4%, a result of positive organic growth within tabletop, offset by a light release schedule within PC console and an increased focus on profitability within mobile. the pro forma growth was -2%. The free cash flow in Q3 was the second highest ever for Embracer, at 1.2 billion SEK. Importantly, for this year, we see even more distribution of free cash flow in the second half compared to second half last year. For fiscal year 23-24, we reiterate our adjusted EBIT forecast of 7 to 9 billion, and now see it likely that we will reach the low end of the forecast range. This is driven by a somewhat softer outlook for PC console compared to our assessment in Q2, due to the performance of recent new game releases, as well as a few additional pipeline shifts from Q4 and shift within the quarter.
That's also what JP Morgan report said.
Delivery across 3 out of 4 segments throughout the year, there is room for further improvement of our financial performance, primarily within PC console. In Q3, cash EBITDA, or EBITDA less CapEx, in the last 12 months was 3 billion on a group level. Excluding the 4 of our operative groups within PC console that has a negative contribution, EBITDA less CapEx would be 5.3 billion SEK. Johan will discuss EBITDA less CapEx in more detail later today. We are tracking well towards the CapEx and OpEx target set out in the program as we approach the final stretch of the restructuring program, which includes both possible divestments and consolidation. On CapEx, we saw an important shift in the quarter with a decrease in run rate from
CapEx is capital expenditure, so the money that you spent.
When the program started, to around 6.4 billion in December, tracking towards our CapEx target of 5 billion when coming into next fiscal year 24-25. As part of the restructuring program, we still have a few larger structured divestment processes ongoing that could strengthen our balance sheet and further reduce CapEx. Processes are in mature stages. It's important to add that certain companies might initiate restructuring before any divestment is announced. However, our overruling principle is always to maximize shareholder value in any given situation. We are
That's what he said.
To reach the target under the restructuring program of below 8 billion SEK in net debt by March 31st. However, certain divestments could significantly reduce net debt post March 31st. To be clear, our group leverage target of net debt to adjusted EBIT of 1x on a 12 months forward-looking basis remains unchanged. We are creating a strong foundation for the future. We are excited about the future and have a notable pipeline of sizable new games in the coming 2 years. I'd like to give some more color on this. In recent years, we have made strategic investments into accelerated organic growth. This has created an imbalance between CapEx and completed games development, meaning new releases, which is now being addressed through our restructuring program. In the past 12 months, we have invested around 6.5 billion into PC console game development, while we completed games, meaning release games, with a value of less than half of that, around 3.2 billion. As we now continue towards reducing CapEx to 5 billion on a group level, it's important to note that for PC console, on a forward-looking basis, we still be investing more than we currently are releasing. This means we are laying the foundation for future organic growth.
I take your word for
an
this.
Updated group-wide capital allocation process is in production, including a clear game investment greenlighting model. Our future games portfolio will be more focused around established IPs and studios, which we are confident will generate better predictability as well as increased ROI and profitability going forward. With the actions that we are now taking, we are creating a strong foundation for the future with an improved financial profile and a more streamlined structure while leveraging the potential for our diverse portfolio. We have amazing assets and IPs, and we aim to demonstrate the earnings power of those assets over time. Phil Rogers, one of our key people managing the restructuring, will go further into details about our progress later in this presentation. From my point of view, we are making good progress on CapEx and OpEx targets, and we are working hard to finalize important aspects in the final stretch of the restructuring program. Now, let's move over to the details of different segments. Net sales in the quarter for PC console games amounted to 3.4 billion, a decrease of -5% compared to the same period last year, or -9% organically and pro forma in constant currency. The negative organic growth development is mainly explained by lower other revenues year-over-year relating to work for hire and other games development revenues. Adjusted EBIT in the segment amounted to 469 million, providing a 14% margin. The adjusted EBIT margin remains impacted by games development amortization, combined with the soft performance for a range of primarily mid-sized titles across operative groups last and this fiscal year. The performance of our strongest franchises in PC console has been stable. In general, we see a more selective consumer and reduced levels of platform content investments. Revenue from new releases in the segment amounted to 470 million in the quarter, an increase of 2% year-over-year. The main revenue driver among new releases in the quarter were Hot Wheels Unleashed 2, Risk of Rain Returns, Arizona Sunshine 2, and Last Train Home. Hot Wheels 2 and Last Train Home were well received by critics and players.
That's not a lot, guys. That's not a lot.
A bit below the financial expectations, likely partly due to a crowded release window. Risk of Rain Returns by far outperformed management expectations. We also saw a notable underperformance for Wildcard Football released early in the quarter. In the quarter, other releases were Teardown on console, Jagged Alliance 3 on console, Borderlands that finally came on Nintendo Switch, SpongeBob SquarePants The Cosmic Shake on console and mobile. Revenue for back catalog titles amounted to 2 billion in the quarter, a decrease of 2% year-over-year. The quarter included the successful release of new content for several games, including the DLC The Awakened King for Remnant 2 and House for Dead Island 2, but was impacted by a soft performance for Payday 3 in previous quarter. If you look at the top 10 back catalog titles, you see it's topping by Remnant 2, Dead Island 2, Chivalry 2, Deep Rock Galactic, Payday 3, Goat Simulator 3, Star Trek Online, Wreckfest, Risk of Rain 2, and finally SnowRunner. Other revenues amounted to 843 million in the quarter, a decrease of 16% year-over-year, but a stable development compared to Q1 and Q2. In corresponding quarter last year, a publishing deal for Tomb Raider was signed with Amazon, driving a notable revenue contribution.
I'm so much waiting forward to this game.
Looking at the ROI chart, it was a mixed bag in Q3. Again, we had a few new small and mid-sized games released that did not perform. Risk of Rain Returns notably outperformed expectation and had very strong ROI. Hot Wheels 2 perhaps did not perform as well as previous game in the franchise and saw a tough release window, but ultimately had a positive ROI contribution in the third quarter. Several other titles, including Wildcard Football, Last Train Home, Arizona Sunshine, and Let's Sing 2024, underperformed and also had an ROI below 1. The weighted average ROI now stands at around 2.2 as of end of the quarter, compared to 2.3 in second quarter. It's lower than we would like due to the underperforming releases in the past 18 months. Our concrete restructuring actions to date are expected to have a positive effect on our ROI going forward. For the games from studios that we have closed down, combined with third-party publishing games where we have no ownership in the development studio, the ROI on pro forma basis is 1 time. Meanwhile, for all other games on this chart, the ROI is 3.2. Worth noting, while we still do third-party publishing in the future, we will be considerably more selective through our updated capital allocation process going forward. Our future games portfolio will be more focused around established owned IPs and studios that we are confident will generate better predictability, as well as increased ROI and profitability going forward. Looking in the investments and pipeline, in PC console game segment, investments in game development remain high. We continue to have an imbalance between CapEx and completed games development, which is impacting our free cash flow generation within PC console. In the past 12 months, our investment into new PC console games were 2 times higher than the value of the games we completed. As stated earlier, we now continue towards reducing CapEx to below 5 billion on a group level, but we still have a growth CapEx post this. This means we will be investing more than the value of complete game development, laying the foundation for future organic growth within PC console, but with a better free cash flow. As of Q3, the capitalized game development cost for ongoing game development projects in the balance sheet amounted to 9.7 billion. In the quarter, we had around 340 million in write-downs related to the restructuring program, which Johan will discuss more later. Looking to the pipeline for the coming, 7 weeks.
This is a very sad pipeline, guys. Very sad one.
Including Alone in the Dark, Outcast, South Park Snow Days, Expeditions, and a few others. Including, yesterday we released Deep Rock Galactic Survivor. And together with Spell Rush, also released this week, it's the first publishing titles from our family members at Ghost Ship Games in Denmark. They have done an excellent job together with the developers, and especially Survivor are off to a really strong start. Tomb Raider Remastered, released yesterday from Aspyr, are also off to a very strong start, both in terms of critic and the sales performance. We are, as stated, looking forward to Alone in the Dark, another game developed in beautiful Skövde in Sweden. We also have Lightyear Frontier, also developed in Skövde, coming in March, from the studio Framebreak within Amplifier Games. Amplifier Games is entering a period of more intense release schedule after several years of investments. Following the release of Lightyear Frontier in Q4, several studios have games that are nearing release over the coming 12 months, which we look forward to. Feel the pressure, Per-Arne. Turning to Homeworld 3, it's a long-awaited sequel in the award-winning sci-fi real-time strategy franchise. Developed by external studio Blackbird Interactive and published by Gearbox Publishing. This title has recently been moved from Q4 to May this year. Moving over to mobile games segment. The net sales in the quarter for mobile games amounted to 1.6 billion.
Faster.
Increase of 4% compared to the same period last year, or by minus 10% organically and minus 2% pro forma. Easybrain had a mid-single-digit organic growth in Q3, while Deca Games, including Crazy Labs, saw a clearly negative organic growth, primarily impacted by business model shift and an increased focus on profitability and cash flows. The number of monthly active users and daily active users both declined year over year, driven by Deca Games and Crazy Labs, partly driven by a shift to a genre with smaller player bases but better retention and monetization. Pro forma growth was more stable thanks to a strong performance for Alien Invasion, for which the publishing rights were acquired by Crazy Labs in August 2023. Adjusted EBIT in the segment amounted to 611 million in the quarter, giving a 37% adjusted EBIT margin. Our user acquisition cost amounted to 646 million, or 39% of net sales. The improved profitability year over year is driven mainly by an improved product mix, with a stronger than expected performance for Easybrain and for Crazy Labs' hybrid casual game Alien Invasion, as well as optimized user acquisition investments. Easybrain saw a solid performance in a seasonally strongest quarter, driven by better monetization and a strong live operations execution across its key games. Crazy Labs' shift to the hybrid casual genre has been accelerated through the game Alien Invasion, which has performed notably stronger than expected. The game was notably accretive to profitability already in this quarter. Meanwhile, hyper casual is expected to slow slightly and partially offset the performance of Alien Invasion. The strongest catalog titles in the quarter were Sudoku.com, Alien Invasion, Blockudoku, Art Puzzle, and Jigsaw Puzzle. Now let's move over to Paris, tabletop game segment. Net sales for tabletop game segment amounted to 4.4 billion, an increase of 7% compared to the same period last year, or by 1% organic, or 1% pro forma on constant currency. Growth was driven by the trading card games category, with a slightly negative growth for board games. Growth in Europe outperformed growth in the US. For the calendar year, the tabletop mass markets saw a slight positive growth, confirming the industry resilience to a difficult macroeconomic environment. Adjusted EBIT amounted to 832 million, providing a 19% margin, mainly due to product mix more geared towards trading card games and a very strong earnings growth year over year in the previous quarter. Asmodee delivered a strong free cash flow in the quarter with a notable inventory reduction in the seasonally strongest quarter of the year. Asmodee has a strong pipeline of novelties and new releases with a number of exciting new titles that reached the market during Q3 23-24, including new original titles such as Forest Shuffle from Lockout, Waterfall Park from Repos Prod, and Perspectives from Space Cowboys, along with a new legacy version on our evergreen Ticket to Ride franchise, Ticket to Ride Legends of the West. Next quarter releases include Ticket to Ride Paris from Days of Wonder, MLEM Space Agency from Rebel Studio, and World Traveler from Office Log. Preparations for the exciting launch of the trading card game Star Wars Unlimited on March 8, 2024 are progressing well, with strong pre-orders and a positive buzz in general. Releasing later this year, we were very excited to announce our first collaboration with Lego on board games, with the global launch of Monkey Palace. Asmodee also announced during the quarter its worldwide exclusive distribution rights and premium supply lines on the upcoming trading card game Altered, which is experiencing consumer success on Kickstarter with a funding goal achieved within 2 minutes. Heading over to entertainment and services segment. Net sales in the quarter amounted to 2.6 billion, an increase of 12% compared to the same period last year, or minus 2% organically and 5% pro forma in constant currency. The organic growth was primarily driven by PLAION partner publishing and film, which saw a notable release of an external first-person shooter game, a solid back catalog revenue, as well as a solid performance for its film business. The higher pro forma growth is driven by Middle-earth Enterprises within Operative Group Free Mode, as the acquisition was closed in October last year. Adjusted EBIT amounted to 305 million, providing a 12% margin. The higher margin year over year is primarily explained by stronger than expected licensing revenues for the Lord of the Rings IP. This was primarily driven by continued solid performance for the Magic the Gathering trading card game, The Lord of the Rings, Tales of Middle-earth. Consistent performance of the Warner Bros. Movie catalog with the Lord of the Rings trilogy and the Hobbit trilogy, as well as the PC console game Return to Moria. Beyond the quarter, Middle-earth Enterprises is looking forward to the theatrical release of The Lord of the Rings, The War of Rohirrim, which has been set for release December 13th, 2024. Dark Horse Entertainment had an encouraging performance in Q3, partly supported by less headwind from external factors and with an increased focus on profitability and cash flow generation. Limited Run Games successfully launched pre-orders during the quarter for many games, including the physical edition of Persona 4 Golden in partnership with our friends at Sega. Limited Run also continues to build the catalog of classic games that are being brought back to modern platforms via the proprietary Tech Carbon engine. The latest Carbon title, Jurassic Park Classic Games Collection, released on November 22nd, showed solid performance on digital storefronts, adding new revenue streams to Limited Run Games. Now looking to the market.
This is now very interesting.
Games market in calendar 2023 is estimated to have generated $184 billion and grown 1% year over year, despite the challenging macro environment for consumers and businesses alike. 2023 was the second highest grossing year in history, and saw a return to growth following a post-pandemic dip 2022. The market value is a substantial 28% above pre-pandemic levels. The longer-term growth prospects remains strong. The total games market is predicted to grow again by 3% 2024, driven by growth across PC, console, and mobile. The market is then expected to grow by 5% CAGR between 2019 and 2026 to a value of 205 billion 2026. With that, I will leave over to Johan for financial comments.
Thank you, Lars. Let us take a look at an overview of the financial.
Okay, guys, so we're not watching the financials, but we're going to very quickly to the Q&A and check out some of the first questions.
All right, we're back with the Q&A. Thank you for the presentations. I'll start with a few of my own, then I'll ask the audience for any questions before moving into the telephone conference and the webcast questions. So first of all, I think it's a lot of focus on divestments today. You have given some color. Obviously, it's very difficult to give details. What would you say, or have there been any changes to these processes, except maybe a longer timeline?
Well, it's obviously there is progress made every day, and there is a very active, process or processes, and obviously they are, as in any deal making, there are changes. Ultimately, until you have a binding agreement, you don't have a binding agreement, and ultimately we need to make decisions what we believe is right for the shareholders. But with that said, I feel confidence.
And maybe a difficult question, but
does he sound
divestment or more
that he has the confidence?
More likely than unlikely?
I think we need to take a step back. These divestments are made under a restructuring program, and it's obviously partly to potentially, to delever the balance sheet, but primarily it's because of also it addresses other targets within the restructuring program, as well as the future strategy. It would have been easy to start a process divesting the absolute most cash flow generated businesses in this kind of M&A market, but that is not what we've been doing.
Then I have two questions for you, Phil. You play a key role in the restructuring, and what would you say is the most important change that you've made or that's ongoing currently?
I think, I'm not saying it's a change we've made, but something we've realized through the program is that there's a great collective knowledge and resource and energy that we've really, I feel, tapped into. It's been a real soul-searching time, restructuring. You see it across certainly the PC console industry, but I think just probably breaking down some barriers and some silos and getting people communicating and sharing has been a welcome really throughout this. It really has been a team effort, and so we've had to step through things in a very logical way, but having lots of people really come and help lean in, I think has been really welcomed.
And you mentioned the current structure with the operating groups and potentially consolidating. What would a key factor for making a merger between one or a few?
I think as I said in the notes, and it really is a reflective point at the end of this 8 month, or we're now 8 months in, that there are natural alliances and common minds on how we want to approach certain games and IP. Honestly, we have this world-class IP portfolio. I say that, but I really hope it resonates. And for many people, probably some watching today and working in studios, this is what gets them up every day and makes them drive forward and forward. And I think certain alliances naturally work around that. I think there's also an alliance around how we share and work more efficiently. So I think these are really again, just what we felt and what we're now sort of working our way through. And there's a determination to deliver better results. I think people see it as a natural course.
And in terms of the underlying market or general market, would you say that there have been any changes this last few quarter, seasonally important quarter?
I think the whole industry feeling a significant shift looking back just from last summer. More or less all companies are through a restructuring program. There's less investments made from the industry into content. I think the underlying consumer market is solid and it's still growing. But the underlying changes, there's lots of underlying changes made to the industry. That obviously affects all of us in the industry. I think looking at the 8% reduction in workforce is, there is obviously, I don't know the number for the whole industry, but I think it's something that everyone needs to get through. And I have to say, it's more driven by the overinvestment in the previous years because everyone just put all capital into gaming and perhaps a bit too much capital in a few instances.
Any questions from the physical audience?
If you have dialed in and want to ask a question, please press pound key on your telephone keypad followed by a 5. We will take a question in the room while you're queuing up.
Hi, good morning. Rasmus Engberg with Handelsbanken. I had 3 questions. One for you, Johan. In the cash flow, there is a more than 1.1 billion negative effect from other operating liabilities compared to last year, which sort of pretty much moves the cash flow to negative year on year. Can you explain what that is?
So then you're referring to the balance sheet, or?
In the cash flow, other operating liabilities.
Okay, so the change, if you look at operating liabilities within working capital and look at that as a whole, the reduction is less than that. So you need to, there is a shift between trade payables and other operating liabilities if you compare Q3 now with the Q3 last year.
And is this something that sort of will even out? And you did mention that you thought the cash flow would be more equally spread over the year. So can you give us some sort of indication for working capital in the fourth quarter, maybe?
Yeah, so if you look at the positive contribution that we have from working capital in the third quarter, it was a bit better than we expected. And we think that the free cash flow generation this year will be more evenly distributed compared to last year, without giving you a specific cash flow forecast for the Q4. But we expect positive free cash flow also Q4.
Yes. And then I have two questions about the restructuring. I don't know if they're for you, Phil, or for Lars, maybe. Is it expected to end in the current quarter? That's the first question.
Yeah, we don't expect to continue the restructuring program. However, I expect to continue adjusting the business forever, but the restructuring program will end in March.
And the second question is more kind of philosophical, I guess. You're down in number of projects under development by 25% from the peak. And looking back, that was clearly contributing to the industry's overinvestment, I assume. Do you think that was a function of your decentralization, your capital allocation, or was it sort of, how is this changing going forward?
No, but I think we follow with a very clear strategy, onboarding great entrepreneurs and backing their business plans. I think everyone has been delivering according to those plans. The thing is, and we put the capital allocation, we put organic first, meaning the first investment came to organic growth, which we now see the outcome of. And then secondly, we made M&A. So it's kind of, okay, we had that strategy back then. Now we need to adjust that because the cost of capital has increased. So it's just the overinvestment into content that is not supported by the cash flow from the operations or external capital. You can debate, the speed we went to build organic growth, but the ambition was obviously to aggressively, organically grow the company. Now we need to adjust for that, and that's basically the core of the issue that we're addressing here.
And so going forward, there will be higher thresholds, so to speak, but will be more or less a similar process.
Yeah, obviously, when you are expanding so much and you taking business risk, both setting up new studios, building new IPs, acquiring game developers that you are investing into, that not necessarily has the track record. If you change that, you need to cut, the things that has the highest, what you believe has the lowest chance of success going forward, and that's what we are doing now, keeping the most iconic studios and IPs under development.
Thank you.
And the first question from the teleconference is from Nicolas Langley from BNP. Please go ahead. Your line is open.
Yes. Hello, everyone. So I've got 4 questions. The first one on the pipeline for AAA games. So a year ago, you announced 31 AAA games in the pipeline, of which 4 for 2024. Considering the ongoing reorganization, how many AAA games are left in the pipeline for the same period? And can you already give us some visibility for next year in terms of AAA games?
Hello, Nicolas. Nice to have you. We decided not to give a full color on the number of AAA games going forward. We feel we are focusing now on the restructuring program and the potential divestments, and we will come back to the market either next quarterly or Capital Market Day to give an update on the future pipeline.
Okay. Then second question, you mentioned lower contribution from the platform deal and PC console. Do you think there is something structural here, or it's just a temporary reduction?
No, I see. Well, in general, there's a few platforms, obviously, that we all know has moved out from the industry that has impact. But I also think that the remaining platform had, as everyone else, a very aggressive approach to investing into content. Now, when they have better data and their cost of capital is higher, they are more selective. What I actually seen in recent weeks, actually, we are signing platform deals for content that we are happy with. Yes, we are turning down some offers. We believe it would be better to go to the market ourselves. But sometimes we are pleased with including some titles in the subscription program. So it's kind of business as usual. If you make the right games, you can do good business.
Okay. Then on the 2.9 reduction of capex, your midterm target, does it include disposal effect, or you can achieve it without any large disposal?
I think we gave color on that. That is including potential divestitures.
Okay. And if you don't make any disposal, what would be the 2.9? Would it be 2, 2.5? Any guess?
I understand your interest, Nicholas, to give full color on this, but I think it would be very speculative. What's important in the end that we are keeping the things we really believe in, ultimately, and that's, I think, the foundation for making decisions, whether it's layoffs or closures or divestments.
Okay, and final question for me. So you have mentioned a couple of times you expect improved ROI in the coming year, supported by all the initiatives and reorganization you're making. How long will it take for the ROI to improve? Is that something we should start to see next year, or we'll have to wait 2 to 3 years to have the full impact of the reorganization?
I think the actual reported ROI numbers obviously is becoming by every quarter larger and larger because it's now 5 years old. So to change that will take some time. But the actual ROI for the games released, I expect to improve notably, at least next fiscal year, because obviously we are shutting down many things we believe the least in and keeping the best. So that would be the outcome of it. We provided some color on that, Nicholas. I'm not saying looking at historical adjusted 3.2 is the right way to look into the future. It's just a data point to give some data point how we look at things.
Okay, thank you very much, Lars.
The next question comes from the line of Martin Arnell from DNB Markets. Please go ahead. Your line is open.
Hi guys, I hope you can hear me.
Yes.
My first question is on your full year guide on adjusted EBIT. It now implies a flattish result in Q4 versus Q3. And I was wondering if you could shed some light on the mix, because in Q3 you had a strong mobile and a weaker PC console. Is that going to be the other way around in Q4, or how do you view the mix?
Well, we didn't provide more color than obviously we're expecting a more busy PC console segment in the fourth quarter, driven by all new releases, including this week's releases. So that we will see will drive more profitability in that segment. Obviously, tabletop had the season's strongest quarter in Q3, so there is a shift between segments. But we still see a solid performance coming out from mobile and entertainment and services.
And the other question I have is on the cash flow outlook. Is it fair to assume the second half is back-end loaded on cash flow, or is it similar to Q3 in your expectations?
No, so the color we gave there is that it will be more evenly distributed. I would say that is the color that we are able to give without giving a firm free cash flow number for Q4. There are different variables coming into play. In terms of cash collection related to the tabletop, that's normally very strong in Q3. But on the other hand, it also depends on when releases within PC console are done in terms of timing and working capital effects. But I wouldn't say that it would be back-end loaded or evenly distributed.
Okay, and final question I have is on the outlook for the next fiscal year starting April. How do you feel about that right now? And there's no outlook for it, but are you confident that you could exceed the low end of the range around 7 billion for next year? Or
no, I think in the report we stated that we see growth. We still have a growth capex and a very strong pipeline that we will be releasing next year and the years thereafter. So, but we have not provided more color because we will come back to the market on this. And I think we should focus here now to get the things done we would like to get done and not put out a lot of new promises to the market. So that's our absolute focus right now.
Okay, thank you.
The next question comes from the line of Simon Jönsson from ABG Sundal Collier. Please go ahead. Your line is open.
Thank you and good morning. Just a follow-up on the capex here. You said the run rate is 6.4 billion. Can you give any color on what the run rate is currently here in mid Q4?
No, it's lower.
All right. Nothing, no more color on that?
No, I'm sorry, but obviously we are making adjustments and we have been doing some layoffs and closures, and so it's getting lower by every month. But I don't have any more color than that. Sorry, Simon.
All right, yeah, I understand. And one final from me. Will you give a new EBIT guidance for next year?
Yeah, it's a very interesting question, and we are debating that a lot. But if we are to give any guidance, we will do that on the Capital Market Day. That's our ambition. But I have a mixed feeling about giving promises for the future. But obviously I understand the market would like to get guidance of how we look at the future. But now we're, again, very focused on executing what we need to execute right now. And then I'm sure my very hardworking, intelligent team members will come up with some ideas and proposals how we put this to the market later in the year.
All right, thank you. That's all for me.
And there are no more questions from the telco, so I hand the word back to you, Erik.
Thank you. We have a few questions here from the web. We're running a bit out of time, but I'll take a few of them. So the first one is from Nick Dempsey, and he's wondering if you can give an indication of how you're thinking about the PC console pipeline into fiscal 25. Will your restructuring have any impact on that slate? And has anything been shifting within your thinking in terms of release dates?
I think the impact on restructuring is less into next fiscal year. It's more for projects that are in other years. There is changes for smaller mid-sized games, but not for any very sizable games.
And he has another question on the disposal regarding these mature discussions. Can you say whether these are weighted to PC console? Because that would help in terms of understanding where CapEx might trend in fiscal 25.
I think that we provided a lot of color around this, so I don't want to take those specific words in my mouth.
Fair enough. We have another question, or a few questions from Victor Lindström at Nordea. So on average, how large proportion of the CapEx is allocated towards the back catalog?
Really good question, and I don't have a specific number on that. I would say it's a fairly small portion of it. I would say a very small portion of it, but let's come back to that in the future conference.
And with regards to the AAA games pipeline, how many AAA games will be impacted by the restructuring?
Again, we will come back to the future pipeline of games. Again, there is changes to the after years to the pipeline, also from some larger projects.
And then a question from Thomas Singlehurst. He says, I don't suppose the move away from net debt guidance is a huge surprise, but it's disappointing. How can we be sure that you're going to follow through on the sale here or potential divestment?
Well, again, I don't have the power to move dates. We have a restructuring program and it's ending in March, and that because of that, that target is passed. We have an underlying leverage target, which is very similar. So our ambition is still to lower the debt and over time get down to 1 times forward-looking EBIT.
And let's see if we can get one more question maybe. Again, on this divestment and you postponing it a bit, or the timeline, could this be related to you're not getting the price that you want to get?
The processes are in late stage, and I think we wouldn't run processes unless we currently had good enough deal terms on the table, because then I would shut the processes down. So with that said, subject to binding agreements, I guess we will be pleased with them.
Okay, I think we'll wrap things up there. So thank you for your answers. Thanks for all the questions, and on the web as well, of course.
Thank you. Thank you, everyone. Thank you, Erik.
Okay, guys. Okay, so I was making this video now a little bit longer because I thought it was very, very interesting to see how the CEO talks and how everyone there involved talks. So it's not so negative anymore. So it seems the restructuring program is working. It's on its way. But on the other hand, also not so much optimism. So, I mean, therefore we saw like 15% stock drop, obviously. So, I mean, guys, I'm so much interested actually in your opinion, because I mean, this is a team job here to think about, to discuss those stocks. Do you think actually we're at the point now where Embracer is interesting again to invest? Or you think like we're going even to the under 10 Swedish krona, so what I personally do not exclude. But hey, guys, no financial advice. I have to say this, you know the story. I have the impression that it takes quite some time for the overall European gaming market, mid-sized gaming market, that we even go back here over the Fibonacci retracement that is painted here at like 39, 38 Swedish krona. So also if we compare this, for example, my friends, if we look then, for example, here at Ubisoft, so it's pretty much the same picture, but Ubisoft is trading overall a little bit more bullish. So but you see the issue they have is pretty much the same. So I expect at this point in time, so if none of those companies goes bankrupt, I expect them actually to trade like pretty similar in the future. And then also CD Projekt, from all those 3 big European gaming companies, I think like CD Projekt looks the most interesting one, since you can see the stock wants to grow. But this is also a bit related to the Polish US dollar, or Polish zloty to the euro. Sorry guys, so I told you therefore I had a cough. So, all right, guys. So I'm leaving this here. This is now 1 hour video. I know that's extremely long, and probably if you watched it though the whole time and you have not liked or subscribed to my channel, so please now you have to do it now, guys. So thank you very much. See you next time. Bye bye.